December marked a clear shift in tone across Australia's housing market. Not a collapse, not a boom, but a transition. National growth continued, though at a slower pace, and headlines became louder than the underlying reality. This is where context matters. According to Cotality, the National Home Value Index recorded its smallest monthly increase in 5 months through December. Importantly, this moderation was not broad-based. It was driven almost entirely by Sydney and Melbourne, where values declined month on month. Every other capital city and most regional markets recorded price growth. In simple terms, the so-called national slowdown is really a two-speed market. You've got eastern states that are adjusting under affordability pressures, while supply-constrained markets continue to be supported by genuine demand. Perth firmly sits at the top of the ladder. While month-on-month growth for Perth moderated through December, which is typical heading into Christmas, underlying fundamentals remained strong. REIWA data shows Perth's rolling median house price lifted to approximately $842,000, reinforcing its position as a national outperformer. Rental conditions remain tight, with median house rents holding around $700 per week and unit rents around $670 per week. Vacancy rates remain near historic lows. This is not speculative demand, it is structural undersupply meeting sustained population growth. This distinction matters. Perth's relative affordability, stronger income to price ratios, and ongoing supply constraints means it is better positioned to absorb higher for longer interest rates than Sydney and Melbourne, where demand has proven far more rate sensitive. Stock levels continue to define the Perth market. According to REIWA, Perth metro listings fell sharply to just 1,862 properties in December. This represents a 36% month-on-month decline. On a year-on-year basis, available stock was down 56.8%. Now, while sales volumes eased into the Christmas period, averaging around 142 transactions per week, the absence of stock, not the absence of buyers, continues to define the Perth market. The absence of buyers remains the dominant force supporting prices. Quality homes in well-located areas continue to attract high competition. Within the city of Melbourne, these dynamics are even more pronounced. The median house price rose 2.29% in December to approximately $1.45 million, taking quarterly growth to just over 3% and annual growth to just 12%. These are not the indicators of a market losing momentum, but of one constrained by scarcity. December recorded roughly even levels of sales and new listings, producing sales to stock ratios of around 50% and a median of just 9 days on market. Even during a seasonal slowdown, well-priced homes continue to transact quickly. Across MGP's core suburbs, including Alfred Cove, Ardross, Adelaide, Bigton, Melville, available stock fell by roughly 32% from November. Notably, there were no houses for sale in Melbourne itself at the end of December. That is an exceptionally rare outcome, and it highlights just how tightly held this pocket remains. At a broader level, the Australian housing market continues to operate against a backdrop of elevated household debt, sits at around 114% of GDP. This has not triggered widespread distress, but it is something we should all start taking note of. Regardless, the market is no longer rewarding optimism, it is rewarding accuracy. Looking to 2026 in Perth, and in particular within blue chip local government areas like the City of Melbourne, structural undersupply remains a powerful support, and buyer demand has re-emerged quickly this year, especially for well-located family homes. For sellers, this is still a market that rewards quality, good presentation, pricing accuracy, but it is far less forgiving for overpriced or lazy strategy. For buyers, being finance ready and decisive remains critical. As genuine opportunities present, they will continue to attract high competition. The takeaway is simple. It's not a market driven by hype or fear. It is a market shaped by scarcity, balance sheet realism, and quality differentiation. In that environment, clear advice and local knowledge matter more than ever. That is the reality beneath the headlines.